Welcome back, guys, to another roundtable. My name is Adam. With me, I have Rusmin.
Hello, everyone.
And Victor.
Hi, everyone.
Thank you so much for joining us. And today we're going to talk about, three things, one from each of us, that we've learned from investing this year in 2022.
Yep.
And we typically like to end the year with this kind of roundtable.
Yep.
Just kind of like share what we've learned, what we've seen, what we've observed. Could be mistakes, could be something that we just observed.
Yep.
And what our takeaways are from those things. So
Yep.
I think it'll be pretty insightful. Maybe some of you may have gone through the same thing. So who wants to go first?
I think I'll just go first, right? I think this is basically what I observed for the past year and you can see that a lot of the growth stocks have actually fallen this year, right? And this brought back to the time where in 2020 and 2021 where everybody are chasing growth stocks, and I can remember that the valuation was going very, very crazy at the point of time, and people are still buying, like thinking that the stocks will go will double up or triple up the next moment and all this, right? Because it was so easy to make money at the point of time, and I go to every dinner, right? I can hear my friends or maybe people around the table, they're all talking about stocks, right? Even
but very particular kind of stocks.
Yes, correct. They talk about growth stocks, they talk about cryptos at the point of time, right? Even the taxi driver also talking, anybody on the street, right? That was the hot topic for 2020 and 2021, and people just buy without thinking about the valuation, right? I can remember at the point of time, those companies that we bought are not basically growth stocks, and we are really losing out to most people at the point of time. It really feels the itch and the point of thing, right? But at the end of the day, it's really valuation do matters. If you were to look back right now, what happens to all the growth stocks? They tank 50 to 90%, right? So, my take is that.
So your friends, do they still?
I think nobody talks about stocks anymore. Right now, it's I think a taboo to talk about stocks. Right, people don't talk about them already, right? Because most people I just hold the stocks until you recover and all this. Right?
They buy high yield bonds, Singapore saving bonds.
Oh, now,
I think
that's
a
very safe investment.
Very safe investment.
Right? Yeah, but then if you must always think, right? If you pay at a very high valuation, right? If the company managed to grow, it's okay, right? But then you must know investing, right? When you buy into company, first is the valuation, second is the investor expectation. So when you buy into growth stocks, right, the valuation is high, the expectation is high, right? So just a switch in expectation, right, can cause the whole share to tank significantly. Compared to when you buy into a company at a reasonable valuation, people don't look at them. A change in expectation also can change the stock price significantly. So at the end of the day, a lot of people were saying like value investing is dead. Right, but my take is value investing is actually a concept, right? It does not matter you buy into growth stocks or you buy into value stocks. At the end of the day, right, you pay less than what the company worth, right? That is value investing, right? For growth stock, it's also the same thing. You pay for what it less than what it actually worth. It's also still value investing because at the end of the day, it's all about valuation, right?
Yeah, I think the pendulum just swings back and forth every, 3-4 years.
It's just amazing. I think the last 3 years, we see a full complete cycle. 2020 was a bear market. Right, and then of course 2021 was a perfect bull market. And 2022 was bear market.
Worse than 2020, right?
So just like that, right?
Yes.
And I remember at one point, I think value investing, like you said, was dead. Now value investing could be back. Then the pendulum just swings back and forth between what's attractive to, I guess, the man in the street. When it comes to
I think you have to really stick true to your investing, stick true to your style. If you really believe it, stick with it. Don't just switch around your style and all this, and also focus on paying the right price for the businesses that you own. Right.
So it goes back to valuation.
Yes, it goes back to
fundamentals are important. Always go back to the valuation.
Because I remember in 2020, 2021 when I asked people who invest in the stock market, so what do you think the company worth, right? They just talking about the company's future, but they don't calculate the valuation. Even when the company have bright future, there's also a valuation. There's always a price tag to any company that you can value out of them, whether you value conservatively or whether you value aggressively, right? But of course, when we do valuation, we want to value them conservatively, right? Right.
So I guess your takeaway is if everyone and your friends and your taxi drivers are all talking about stocks.
That is a danger sign.
That is a danger sign. That's correct. A red flag.
Actually, it happens. This is not the first time it's happened, right? It happens many times in the past history, right? The closest to this, right, was in 2015, right? If you look back into the China stock market, it was like going significantly shot up and after it crashed down within just 6 months only.
I remember news like articles where like farmers were like quitting their jobs,
selling all the farms,
and then started to invest.
Yes,
that was scary.
And I have friends who flew down to China. Also, they taxi driver have 2 screens, so both not the navigator screen. One is navigator, and then 2 screen are stock prices.
Yeah,
when they're driving.
They were driving. That was
I think these are the common signs where you are in the significant, I would not say bull market, but where everybody's just rushing in, right?
Yeah.
And when everybody's rushing in, there's no alpha, right?
Yeah.
How can you get alpha when everyone is looking at the same thing? You get alpha because you buy into something that people didn't expect, right?
You go against the crowd.
You go against the crowd, right?
Alpha,
so I think the China stock market, not only the taxi driver, like they came out with news in, I think, Bloomberg or something, right? Say that, I took the advice from my barber, my hairdresser.
Okay.
My hairdresser told me that, this stock, and I significantly lose all my saving in China.
Okay.
And that's exactly what happened in China, and it happens 2 or 3 years, I think it's 5 years down the road, right?
Yeah, I mean, the cycle just repeats itself.
It won't be the last.
Yeah, you have different players.
Yeah. The only the way to protect yourself is really just to get educated about what you're buying. Do you understand it? Are you comfortable with the risks? And what is the valuation?
Yeah, correct.
That's the only way to protect yourself.
And if everybody is rushing in, the more you should be staying out. Right?
Okay.
I know there will be an itch in your heart, like this guy is making money, It's very itchy where you buy into this company, right? You, for instance, let's say example that year you make 20%. Or maybe let's say 50% gain on the stock, right? But your friends make 200%, 300%.
Yeah, FOMO.
Yeah, that's the itch, right? But then at the end of the day, you must tell yourself, you are not investing for the short term, right?
Correct.
You're investing for the long term. You are a marathon runner. You are not a sprinter, right?
Yeah.
So you have to really stick back to your fundamentals, your philosophy, right? Right. But of course, if you are those who chase after all these trends, then you must also know that when you get in, right, there's a time to get out also. So a lot of people sees that 2020, 2021, the ARK ETF is doing very well. Everybody's buying to the ARK. But my thing is, if everyone is buying, how do you create alpha? Right, this is the first question. Second is that the ARK actually went down because everybody bought into them. But if you are those who you are very clear of your investing, you are maybe like a momentum investor. You buy, the trend go up, you sell. Then you may have profit from the trend of when every crowd.
Depends on the skill of the investor, right?
It boils down to your investing method, right?
Okay.
You don't want to use your fundamental methods and you chase after trend. That's right, and you want to hold it long term. Then you experience the boom and bust and all this, right?
Yeah, I think the main issue is that if you have a strategy like value investing and then you start to see all your peers are making a lot of money in cryptos, in growth investing. I mean, we have friends who's dumped their value investing strategy and switched fully into growth investing at a point of time. I was very surprised.
Yeah.
Okay. And now I don't know what happened, right?
Okay.
So, but basically, there's a time where their strategies to work well, but they have dumped that strategy. Okay. And that's why I think in the bear market, never ever doubt your strategy. You got to stick through it until when the cycle completes, and then you can reflect and fine tune and improve the process along the way.
Correct.
Okay.
I still remember 2020. Everybody was laughing. Warren Buffett, he's outdated. But look at Warren Buffett now.
Very well.
Yes.
Perform better, but what has ARK now compared to him?
So I think just to summarize, basically, it happens again and again. If this is your first cycle, you go like, oh, what's happening? But you've seen it so many times.
I mean, it's okay to make mistake on this cycle. Yes, I mean, if you're still young, it's good, right? But if you have been through a few times, you're still repeating the same mistake, then that is, you cannot be acceptable.
All right. So for me, I think that was on a macro scale. For me, it's more of a micro thing, where I experienced that disruption is actually really, really real for companies. So I think we've seen how some companies are so outdated in a sense. And I mean, they have a slow death, kind of like newspaper businesses and stuff like that. But for me, Facebook was a pretty surprising disruption in my eyes, because I think if you remember, Facebook was still is actually one of the biggest companies in the world. Yeah, number one, number two in digital advertising, global company, makes tons of cash flow. But you look at it now, you're kind of wondering what the hell is happening with it. I think we covered a recent roundtable on Meta, Facebook, and the PE at that point in time was 9. It's extremely cheap for such a, at one point in time, I would say it's a high quality company. But because of one simple change by Apple, the iOS changes, which you just can't track the user behavior, harder to target the ads, And Zuckerberg was just like, I got to change my business model. He just went, no, this is dangerous. I got to change my business model. And he just went all in on the metaverse, which to me is kind of like, you don't know what's going to happen.
Yep.
And even if the metaverse were to happen, you don't know if
they're going to be the dominant
one. Yeah. Be Apple, because of the devices that they're so good at.
Yes.
You know?
Yeah.
And just like that, a company that was just like one of the best companies in the world was just disrupted like that in a sense. Yeah. I mean, you could say that Zuckerberg is trying to get ahead of the curve. But it's just like this disruption thing is very real, and it can happen to the best companies in the world, like even like Facebook. And
I think nobody stays at the top, right? If you look at the past S&P 500, right, you used to have one company who are still inside S&P 500 since day one, but it's removed, which is General Electric, right? And right now, if you look back, the day they started until now, the businesses in the S&P 500 are totally different, right? But it's only that in the past, they stays in the S&P 500 for a long time.
Yeah, because the rate of innovation was a lot slower. Right. Now it's just
now it's very fast. I think they did a research. I think a few years back when I read, the research was like, I think now it's like maybe every 17 years you have to change or something, right? But it's getting shorter. Maybe now it's like maybe 7 years or something like that.
Yeah. So I guess my takeaway is that disruption can happen to any company. Yeah. So I mean, Google, looks like so dominant. I don't see how we don't see how Google can be overtaken, but it can just happen with AI or something like that. And it's just like the business just changes.
I think it's exactly like what Charlie Munger said, like using the mental models, right? If you look at humans, we will all die, right? That's how natural selection, right? So same for companies. There's also a natural selection. No companies can last forever. Eventually they will die and all.
Survival of the fittest.
So I think then another adjacent takeaway is that you don't ever put all your money in one company. Because I think a lot of people would, I think Facebook, if you were to make a case, it's a really good company. You maybe put a lot of your money in. Maybe in 2018, 2019, COVID boom and all that. It really helped Facebook.
Accelerated the whole.
But then just like that, it just went off a cliff. And if you put all your money in that one company, painful.
So that kind of links back to the lesson that I learned, where I know it's about portfolio management, and of course when you invest, you always spread across a few companies, right? 10, 20. We just had the World Cup. YouTube roundtable on discussion on how you manage your portfolio, but I'm not going to repeat on that. But what I've taken away is that when I first started investing, I learned this quote, right? Never sell your winning stocks. You should keep them and hold them and let it run, let it compound. And that has been true to me since the day one. But for the last 2 years, since 2020, I've observed that actually that quote is actually you have to bring it and apply into the right context. Because the last 3 years we've seen how a lot of tech stocks, even like the FANGs, have grown pretty strongly, and I think we've seen a lot of valuation across companies across the board in the S&P 500 have hit all-time high in 2021. And I think 2020 was a year where we were very aggressive, buying a lot of US companies, and we even pumping more money to actually buy those companies. And of course, 2021, when I looked at it, I was like, wow, most positions, none of them are in red.
It was all green,
It was all green. It was like 50%, 100%, 200% in gains. And when I look at the valuation metrics, back to what Victor mentioned, valuation matter, right? And I said, it's all on the high side. Right, and but looking at all the indicators, whether it's PE, PB, price to cash flow, it's all on the high side. And when I wanted to sell, but then when I remember that never sell your winning stocks, so that kind of like put me in a very hard position. Should I break the rule or shouldn't? Which I didn't break the rule, and I hang on to it. And 2022 was a bear market, and a lot of companies have fallen. Of course, the gain 200% become 100%, which is still not too bad, but some have fallen. Like Amazon, for example, I bought and then almost doubled. And then now back to the square one. Because of all the stuff, right? So on the high side, of course, I could have just sell those companies, despite the indicator are telling me that all valuations are very expensive. So I could, instead of doing a full sell down, you can just do a partial. Sell out my initial capital. At least I still have a position.
Like basically, you just have more cash. You convert it more into cash because as the markets get more expensive.
And then 2022 is a bear market. Of course, we can use this cash to buy even more share. But of course, that is on the hindsight. Okay? So it's a little bit of timing, but sometimes as I look back, I think we got to look at the context when the market is heated up, like what we saw in 2021, where everyone is just buying stocks, and chasing. And you hear people on the street, taxi driver, everyone is talking about stocks, and you should start to pile down some of your position. At least you can boost your cash, and that will be very useful when 2022 happens, the bear market happens.
Okay. Yeah. But again, you can't really predict when it's going to turn.
Yes.
So this I mean, it's good. I mean, first I want to point out, it's great that you didn't change your rules.
Yes.
Right? Because like you said, you go through the entire cycle, and then you go to look back. You kind of look back and you go, oh, okay, maybe I should have done this to improve the process. Yeah. But I think that quote about holding on to your wins is still useful.
It's still useful
for most people, because to time the market time the market in a sense, it really depends on the skill of the investor.
Yes, yeah.
And you've been in the market for so many years.
Yes,
we've gone through so many cycles. You kind of know maybe this is what I should do, but for a first time new guy, could be a bit tricky, right?
Yes, it's a bit tricky. But I think like I said, if the next time when I see that the market is overheated and everyone's, even people who don't invest suddenly talk about investing, I would consider paring it down, at least boost my cash position.
Okay.
Yeah. So, but I will not be fully cash out.
You won't sell everything, right?
And then I will wait for the market to crash, because that's a silly thing.
Because you experienced the opposite of that. The flip side was when I think you mentioned, I think it was in 2011, 2012. There was the REIT, the Euro debt crisis.
Yep. Yes.
And then I think you knew of someone who basically sold everything.
Oh yes,
to prepare for the impending crash that never happened.
Yes. And then by then the market have gone up.
Yeah. So that's the flip side of this.
I think at the end of the day is you have to be always in the market.
Okay.
Right? The thing that changes in your portfolio is the cash position percentage. Either you become a bit more cash or less cash. Right? That's all. Right? If it's a bear market, your cash position should be going to single digit. Right? Yeah. If it's maybe a very bull market, try to make it double digit cash. Build it up and all this. Clear some of the position. So you just keep going up and down. That's all. But you are still in the market, right? Because there's still some position in the market.
Yeah. You probably won't cross more than 50%.
Yeah. Okay.
Like cash position, right? Probably, let's say, during the bear market like 2020, we almost 100% deploy, all right? And then of course during the bull market 2021, we could have beef up 20-30% cash by paring out some of the position that we have. Okay. And then that 20-30%, let's say if you are short in cash, it will be very useful in 2022 for you to deploy. Yeah.
So I think that's the what do you call it, the most optimum way to kind of the most ideal way to kind of manage things.
But you need to get a good sense of how the market.
Yes, correct. Yeah. So I think if you're new to investing, this is very hard.
Yeah, it's hard. Right. Could you imagine doing this when you in 2011, 2012?
No, I can't, because I just don't know how is it like.
This is based on your experience after so many years.
Yes, correct. In the market. I mean, if you're still new, buy and hold it still works. It's just that you have to ride through. It's just like S&P 500, right? If you have bought S&P 500, you hold for maybe example 20 years. I think that's the time period, right? You maybe don't make that much, but you hold for 30 years, you make back the returns, right?
I think
so investing is a very long term thing, investing, right? You buy for a certain company, but you buy it for a long term.
Okay.
Right? You only invest money that you don't need.
Okay.
Right? Yeah. And the money that you invest you don't need those are your retirement money. You know that you will start selling and buying down that position when you retire, right? So if you start young, right, you retire, probably you're going to take you 30 years or 40 years later, then you retire. So there's a timeline for you to make the gains and all this. And buy and hold still does work, I would say. It's just that you have to ride through the emotion cycles.
And that comes with experience.
Yes, correct.
Which is what you have. So this is your takeaway for this year. Is actually for more advanced investors.
Yep.
People who have been in the market. And I think you've gone through so many cycles, and you go I think I have kind of a handle of how things work.
Yeah.
And then you could accordingly it that way.
Yep. You see how the market is playing out, and then you just adjust your cash position, your portfolio accordingly.
Yeah, that's true. All right, so I think those are our 3 takeaways for this roundtable. I think 2022 has been I think it's still a pretty decent year for us.
Yes, correct.
Still plenty of opportunities. Yeah. So hopefully 2023 will be another exciting.
We'll see how it goes. We'll be pretty excited to see how the economic factors play out. Interest rates and all that, inflation and all that. Yeah. So always things to talk about when it comes to investing. So please do stay subscribed to our channel. This is going to be our last roundtable for this year in 2022. We hope you had a really good time following us this year. We had a lot of fun. I had a lot of fun talking to two of you.
Yep.
And our various guests along the way as well. Just, hanging out with my mates and just talking about investing.
Yeah.
And I hope it was a good time for you and learned a lot of stuff. So with that, we want to wish you, happy holidays and a happy new year.
Yeah. So of course, if you have any comments and you have any learning and takeaways, you can feel free to share.
Yeah, share them in your comment section. So I think this is a pretty good wrap up, right, guys? Okay,
have fun.
Thank you.
Yeah. So thank you so much for watching. Thank you so much for being a subscriber. Or if it's your first time, hope you join us as well. Any questions or things you want to share, put them in the comment section. If you like this roundtable, please hit the like button. It always helps us. And of course, subscribe to the channel. Many more roundtables coming in the new year as well. We really wish to see you join us as well. Yep. And I think that's a pretty good, year. All right. So thank you so much. My name is Adam. That is Rusmin.
Thank you.
Victor.
Thank you.
And we'll see you next year.